Look at what just happened to silver. While everyone was distracted by the holiday season, something extraordinary occurred in the precious metals market that's sending shockwaves through the financial world. Silver just shattered its all-time record high, blasting past $67 per ounce. And this isn't just another price spike that'll fade away. This is the beginning of something much bigger. Let me show you what's really happening here, because the mainstream financial media is completely missing the story. They're talking about silver like it's just another commodity, having a good year. But when you dig into the actual data, when you look at what's driving this move, you realize we're witnessing something that hasn't happened in decades. And the implications for your wealth, for your retirement, for everything you've worked to build are massive. Silver has gained over 120% this year. Think about that for a second. While your savings account is earning what? 4%? Maybe 5% if you're lucky? Silver has more than doubled. But here's what nobody's telling you. This isn't speculation. This isn't retail investors piling into a hot trade. This is a fundamental supply crisis that's been building for 5 consecutive years, and it's finally reaching a breaking point. The global silver market is in its 5th straight year of supply deficit. That means for 5 years running, the world has been consuming more silver than it produces. Every single year, we're drawing down existing stockpiles just to meet demand. And those stockpiles? They're running dangerously low. The Silver Institute just released data showing that industrial demand alone is at record highs, and it's accelerating. Solar panels, electric vehicles, 5G infrastructure, medical equipment, every major technology trend of the next decade requires silver, lots of it. But here's where it gets really interesting. While industrial demand is soaring, mine production is actually declining. The major silver-producing countries are seeing output fall. Mexico, Peru, China, they're all producing less silver than they were 5 years ago. New mine development has essentially stopped because silver prices were suppressed for so long that it wasn't economical to bring new supply online. And here's the kicker. It takes 7 to 10 years to develop a new silver mine from discovery to production. Even if companies started today, even if silver stays at these elevated prices, we won't see meaningful new supply until the early 2030s. So you've got surging demand, falling supply, and no cavalry coming to save the day. That's the textbook definition of a supply squeeze. And the market is finally waking up to this reality. Now, let me tell you what's really driving this breakout, because it's not just about supply and demand fundamentals. There's a geopolitical dimension to this that's absolutely critical to understand. Central banks around the world are diversifying away from dollar-denominated assets at a pace we haven't seen since the 1970s. They're buying gold in record quantities, sure. But silver? Silver is starting to get attention from sovereign wealth funds and institutional investors who understand that it's massively undervalued relative to gold. The gold-to-silver ratio, which historically averaged around 15 to 1 for thousands of years, got as high as 120 to 1 during the pandemic. That means you needed 120 ounces of silver to buy 1 ounce of gold. That ratio has now compressed to around 40 to 1. But here's what the smart money knows. If silver just returns to its historical average ratio with gold, and gold stays where it is today, silver would need to trade above $150 per ounce. And if gold continues its own bull market, which every indicator suggests it will, silver could go much, much higher. Let me paint you a picture of what happened the last time we saw a setup like this. Go back to the late 1970s. Inflation was raging. The dollar was losing credibility. Oil prices were spiking. Sound familiar? Silver went from $5 an ounce in 1979 to $50 in 1980. That's a tenfold increase in less than 2 years. Now, I'm not saying we're going to see that exact scenario play out again, but the fundamental drivers are eerily similar. Monetary debasement, geopolitical instability, supply constraints, and a flight to hard assets. The difference this time is that silver has a genuine industrial demand that didn't exist in the 70s. Back then, silver's primary use was photography and silverware. Today, it's an absolutely critical component in the green energy transition. Every solar panel requires about 20 grams of silver. The solar industry alone is projected to consume over 200 million ounces of silver annually by the end of the decade. Electric vehicles use twice as much silver as traditional cars. 5G networks require significantly more silver than 4G infrastructure. We're not just talking about investment demand here. We're talking about industrial consumption that's literally irreplaceable. And here's something that should terrify anyone who understands market structure. The COMEX, the major exchange where silver futures are traded, has a paper-to-physical ratio that's completely disconnected from reality. There are hundreds of ounces of paper silver claims for every ounce of actual physical silver in the vaults. This works fine when everyone's playing the paper game. But what happens when industrial users start demanding physical delivery? What happens when investors lose faith in paper promises and want the real thing? We're already seeing signs of stress in the physical market. Premiums on physical silver coins and bars have been elevated for months. Delivery delays are becoming common. Some dealers are limiting purchases. These are the early warning signs of a market that's running out of actual metal. And when the paper market finally breaks, when the disconnect between paper prices and physical reality becomes undeniable, that's when you see price moves that shock everyone. Let me tell you about something that happened in the nickel market last year that should serve as a warning for what could happen in silver. The London Metal Exchange had to halt trading and cancel billions of dollars in trades because the price of nickel went absolutely parabolic when a short squeeze developed. Physical nickel was unavailable, paper contracts couldn't be settled, and the entire market seized up. Now, nickel is a much smaller market than silver, but the dynamics are similar. Heavy paper trading, limited physical supply, and industrial users who need the actual metal. If something similar happens in silver, and there's a growing chorus of analysts who think it will, you're going to see price moves that make this current breakout look tame. We're talking about a potential moonshot that could take silver to levels that seem impossible today. Some analysts are throwing out numbers like $100, $150, even $200 per ounce. And while those numbers sound crazy right now, they're not based on wild speculation. They're based on what happens when you have genuine scarcity in a market that the world desperately needs. Now, here's where this gets personal for you. If you're sitting on retirement savings, if you've got money in traditional stocks and bonds, if you're worried about inflation eating away at your purchasing power, you need to understand what silver represents. It's not just an investment. It's insurance against monetary chaos. It's a hedge against the debasement of fiat currencies. It's a way to preserve wealth when paper assets are losing value. Quick aside here. If you've got $100,000 or more in retirement accounts, I put together a comprehensive guide on how gold IRAs work. It's in the description below, covers exactly how you can get physical precious metals into your retirement account without triggering tax penalties. Worth checking out if wealth preservation is on your mind. All right, back to where this silver story is headed. The institutional money is starting to flow into silver in a way we haven't seen before. The largest silver ETF just reported record inflows. Hedge funds are building massive long positions. Even retail investors, who were burned in previous precious metals rallies, are starting to pay attention again. And this is still early. The vast majority of investors have no exposure to silver whatsoever. When this story goes mainstream, when CNBC is talking about silver every day, when your neighbor is asking you how to buy it, that's when you know the real mania phase has begun. But here's what separates the people who make life-changing wealth from precious metals, rallies versus those who miss the boat. Timing and conviction. The people who bought silver at $5 in 2003 and held it to $50 in 2011, they understood the fundamental story, and they had the conviction to hold through the volatility. The people who bought at $48 and sold at $30, they were chasing momentum without understanding the underlying drivers. Right now, we're in the early stages of what could be a multi-year bull market in silver. The fundamentals have never been stronger. The supply deficit is real and getting worse. Industrial demand is accelerating. Central banks are diversifying. The dollar is losing its grip on global reserve currency status. These are massive, slow-moving trends that don't reverse overnight. This isn't a trade. This is a structural shift in the global monetary system. Let me tell you what the smart money is doing right now. They're not waiting for confirmation. They're not waiting for silver to hit $70 or $80 before they buy. They're accumulating now, while the story is still under the radar. They understand that by the time everyone agrees that silver is going higher, most of the move will already be over. The biggest gains in any bull market are made by the people who position themselves before the crowd arrives. And here's something crucial to understand about silver versus other investments. Silver is nobody's liability. When you own physical silver, you're not dependent on a company's earnings, a government's promises, or a central bank's policies. It's real, tangible wealth that's been recognized as money for 5,000 years. Every fiat currency in history has eventually gone to zero. Every single one. But silver? silver has maintained its purchasing power across millennia. Think about what a Roman soldier was paid 2,000 years ago, about 1 ounce of silver per day. What could that buy? A decent meal, some basic supplies, a place to sleep. What can an ounce of silver buy today? Pretty much the same thing. That's the power of real money versus paper currency. The dollar has lost 99% of its purchasing power since the Federal Reserve was created. Silver has maintained its value. Now, I want to talk about what happens next, because this is where it gets really interesting. Silver is approaching a critical technical level that, if broken, could trigger a massive surge in buying. The previous all-time high was around $50, set back in 2011. We're now well above that level, which means we're in price discovery mode. There's no resistance above us, no overhead supply from people who bought at higher prices and are waiting to break even. This is uncharted territory, and in technical analysis, that's when you can see the most explosive moves. The chart pattern that's developing in silver right now is what traders call a cup and handle formation. It's one of the most bullish patterns in technical analysis. Silver spent over a decade forming the cup, consolidating and building a base. Now we're breaking out of the handle, and if history is any guide, the measured move from this pattern suggests silver could easily reach $100 or more. And that's just based on the technicals, not even considering the fundamental supply crisis. But let's talk about the elephant in the room. What could derail this silver bull market? What are the risks? Because there are always risks, and anyone who tells you otherwise is selling you something. The biggest risk to silver is a deflationary collapse. If the global economy goes into a severe recession, if demand for industrial metals craters, silver could pull back. But here's the thing. In that scenario, central banks would respond with even more aggressive monetary stimulus. More money printing, more currency debasement, which ultimately drives people back to precious metals as a store of value. The other risk is government intervention. If silver prices go too high too fast, if it starts to threaten the credibility of fiat currencies, governments could step in. They could raise margin requirements on futures contracts. They could restrict ownership. They could do what FDR did with gold in 1933 and confiscate it. Now, I think that's unlikely with silver because it's so critical for industrial applications, but it's a risk you need to be aware of. Here's what I think is more likely to happen. Silver continues to grind higher, with periodic pullbacks that shake out weak hands. The supply deficit continues to worsen. Industrial demand continues to accelerate. More investors wake up to the story and start allocating capital. The paper market comes under increasing stress as physical demand overwhelms available supply. And eventually we reach a point where the price of silver has to rise dramatically to ration the limited supply among competing users. When that happens, when silver goes into true shortage, you're going to see prices that shock everyone. We're talking about a potential repricing of silver that reflects its true scarcity and utility. And the people who positioned themselves early, who understood the fundamental story and had the conviction to hold through the volatility, those are the people who will build generational wealth. Let me give you some perspective on what that could mean in real terms. If you bought $10,000 worth of silver at $20 per ounce, you'd have 500 ounces. If silver goes to $100, that's $50,000. If it goes to $150, that's $75,000. If it goes to $200, that's $100,000. Now, I'm not making predictions about where silver will ultimately top out. Nobody knows that, but the risk-reward ratio at current levels is extraordinarily compelling. Compare that to what you're getting in traditional investments right now. Stocks are trading at historically high valuations. Bonds are offering negative real yields after inflation. Real estate is priced for perfection in most markets. Where else can you find an asset that's in genuine shortage, has accelerating industrial demand, is breaking out to all-time highs, and still has the potential to double or triple from here? The other thing to consider is portfolio diversification. Even if you're skeptical about silver's upside potential, even if you think I'm being too optimistic, having some exposure to precious metals makes sense from a risk management perspective. If the dollar continues to weaken, if inflation remains elevated, if geopolitical tensions escalate, precious metals are one of the few assets that tend to perform well in those environments. It's insurance that you hope you never need, but you're glad you have if things go sideways. Now, I want to address something that I hear all the time from people who are hesitant to buy silver. They say, "But I missed the move. Silver is already up over 100% this year. Isn't it too late?" And my response is always the same. Go back and look at previous precious metals bull markets. In the 1970s, gold went from $35 to $850. That's a 24-fold increase. Silver went from $5 to $50, a 10-fold increase. And here's the key. Most of those gains came in the final 2 years of the bull market. The people who bought gold at $200, thinking they'd missed the move, still made 4 times their money. In the 2000 to 2011 bull market, gold went from $250 to $1,900. Silver went from $5 to $50. Again, most of the gains came in the final phase of the bull market. The people who bought gold at $1,000 thinking they'd missed it still almost doubled their money. The lesson is clear. In a genuine bull market driven by fundamental supply and demand imbalances, it's rarely too late until it's obvious to everyone that the party's over. And right now, we're nowhere near that point with silver. The mainstream financial media is barely covering this story. Most investors have no exposure to precious metals. The supply deficit is getting worse, not better. Industrial demand is accelerating, not slowing. We're in the early innings of what could be a multi-year bull market, and the biggest gains are likely still ahead of us. Let me tell you about the psychology of bull markets, because understanding this is crucial to making money. Bull markets don't move in straight lines. They climb a wall of worry. Every time silver pulls back 5 or 10%, people panic and sell. They think the move is over. They think they should have sold at the top. But the people who understand the fundamental story, who have conviction in the thesis, they use those pullbacks as buying opportunities. They accumulate more. And when silver resumes its uptrend, they're positioned to capture the next leg higher. The other psychological trap is waiting for the perfect entry point. People see silver at $67 and they think, I'll wait for it to pull back to 60 before I buy. Then it goes to 70. I'll wait for it to pull back to 65. Then it goes to 75. And before you know it, they've missed a massive move because they were trying to save a few dollars per ounce. In a bull market, the best time to buy is when you have conviction in the story, not when you think you've found the perfect technical entry point. Here's what I want you to take away from this. Silver is in the early stages of what could be a historic bull market. The fundamentals have never been stronger. The supply deficit is real and worsening. Industrial demand is accelerating. The paper market is showing signs of stress. Central banks are diversifying away from dollars, and we're breaking out to all-time highs with no overhead resistance. This is the setup that traders dream about. But more importantly, this is about protecting your wealth in an era of monetary chaos. The dollar is being debased. Inflation is eroding purchasing power. Traditional investments are overvalued and vulnerable. Silver represents real, tangible wealth that's been recognized as money for thousands of years. It's insurance against the failure of fiat currencies. It's a hedge against inflation. It's a way to preserve what you've worked your entire life to build. The question isn't whether you should have exposure to silver. The question is how much exposure makes sense for your situation. And that's something you need to figure out based on your own financial circumstances, your risk tolerance, and your investment timeline. But I'll tell you this. The people who look back on this moment 5 years from now, when silver is trading at levels that seem impossible today, they're going to wish they'd taken action when the story was still under the radar. This is your moment. This is your opportunity to position yourself ahead of the crowd. The smart money is accumulating. The fundamentals are screaming. The technical breakout is confirmed. Everything is lining up for a massive move higher in silver. The only question is whether you're going to be part of it or whether you're going to watch from the sidelines and regret not taking action when you had the chance.